Hi, everyone. I'm excited to be here with Aeron, and Aeron is the founder of HedgeDesk. And HedgeDesk is a company that is going to make some significant changes as far as helping eliminate currency risk. And I am going to let Aeron kind of describe what that means and what that entails. But starting out, Aeron, I would like you to share a little bit about your background, kind of talk about, where you started out educational wise, kind of that journey up that led you to being the founder of HedgeDesk, and talk a little bit about that.
Yeah, great. Yeah, thanks, Jerry. Thanks for having me. So I went to school. I went to college to be a lawyer. I was in the pre-law program, and I did love debate. Loved the sort of underlying principles of what makes the current law system. But I kind of got bit by a bug in my junior year of college and decided to join the Marine Corps. So I went into the Marine Corps as an officer. I served 8 years. First 5 years, I was doing traditional Marine Corps stuff, deployed to Southeast Asia, deployed to the Middle East. But the second half, I had a rare opportunity to serve at what's called a warfare lab. And if you're part of the military industry and you're creating weapons or vehicles or software that would be considered classified, you can't just test them at any old place. You have to take them to a certified warfare lab or facility to actually test these things. So I was the operations officer for this warfare lab that basically tested anything that would bridge the sea to land gap. So Navy, Marines, we would test that stuff. And we were actually revenue generating for the Treasury, one of the few areas of the US government that's actually revenue generating, maybe perhaps other than the IRS. And so in any case, I kind of fell in love with business there, being exposed to industry, contracts, personnel management, fell in love with business, and ended up starting a technology company as I got out of the Marines in 2015. Started a technology company in the legal marijuana space. And at the time, we saw marijuana blowing up in Colorado, and we saw what was probably going to likely take place across the nation. And we started a distribution company that functioned a lot more like Amazon. So it was a digital distribution company. So all business to business, both making it easy for buyers and sellers to operate together, but also to handle all the regulatory and compliance aspects, because you basically had now a regulated pharmaceutical drug, and there was a lot of requirements on these business owners. We made that all easy. That company blew up. It grew really fast. I was named to Inc. Magazine's 30 Under 30 in 2016 for leading that company. And for lack of better words, I basically had a conversion experience in 2016. I had a sort of experience with Jesus and became a Christian. And so I had a worldview shift that kind of changed my perspective on the business that I was doing. And in changing that perspective on that business, I just felt like I wasn't placing a value judgment on marijuana as a whole, but I had a fiduciary duty to sell as much of it as possible to as many people as possible. And I just really couldn't get behind that. So it took me 3 months, hired an interim CEO, gave all of my stock back to the board to redistribute to shareholders and company personnel. And it took me about 3 months, but I moved out of that company and started working a few months later at an organization called Bible Project. Bible Project is, I think, likely the fastest growing crowdfunded project in world history. When I came in late 2016, early 2017, we were bringing in, a modest sum of donations every month, $10, $15 from a couple thousand folks. And we're doing about $75,000 a month in crowdfunded donations. I think this upcoming year, so 5 years later, they're going to post somewhere between 25 and 35 million, all in donations. Everything is for free. It's just merely creating a fun and engaging sort of creator economy experience for those that give. And we've now reached hundreds of millions of people with those videos. And so it was a great opportunity for me to learn not just how to build a business, but how to market, how to build a brand, how to communicate. So that's been a fun ride. How it connects to HedgeDesk. About 2018, we started translating those videos, and we were engaging with contractors all over the world. And these contractors, of course, are getting paid. And we ran into a currency exchange rate issue where we would sign a contract, the currency would move, and then it would change the amount that the contract was due. And when you have that across hundreds of contractors, it becomes a problem. I reached out to the leading financial firm in the world that handles exchange rates, called Chatham Financial. And I called Chatham And through a friend, I got connected. I called Chatham. I said, hey, we've got this couple $1 million exchange rate issue. What can we do to solve it? And they said, you are way too small to even begin to solve this problem. And I said, well, how big do you have to, how small can you be where you can still really solve the problem? They said about 5 billion in exchange rate exposure. And of course, there's hundreds of thousands of businesses that have exchange rate issues that do not do $5 billion a year.
Sure.
And that's where I realized that this wasn't just our problem. This was a problem for a lot of people. Yeah.
That's a fantastic story. And first of all, thank you for your service. Greatly appreciate that. And always have to give respect and, the kudos for serving in the Marines. So my brother was 27 years Army. So got a soft spot for anyone who served in the military. And thank you for that.
Sure, it's my pleasure.
So, you're obviously going to be making an impact on a very significant large industry and sector when you're dealing with exchange rates and currency. I mean, global.
Sure.
And give us a quick idea, because we have to learn everything about the company and what you're doing. But give us
naturally,
what I would call a quick elevator pitch, like within 1 or 2 minutes, kind of go through the whole pitch of what your company's doing, and then we'll take some time and do a deep dive more into the various aspects of that pitch.
Sure. Yeah. So, for most of us, we've traveled overseas before, and nowadays we just swipe the credit card and the bank does an exchange rate for us. But many of us remember actually going to the currency counter and exchanging our dollars for pounds or euros or, maybe even Italian francs or Swiss francs at some point, and before the euro was around. Now, we don't think much of that when we're just traveling and having fun. But if you're a business operating internationally, you're doing those exchange rates all of the time, and they can really impact your business. We'd like to think that the value of a dollar to a euro stays the same over a period of work, but that's just not the case. As exchange rates go up and down, the cost of doing business overseas or the money made overseas goes up and down with it. Now, if you're a large company, and I mentioned earlier in that story, the 5 billion plus, if you're a large company doing a significant amount of overseas transactions, you have the money to go hire a Chatham Financial, or if you're Apple or Google, you actually build your own treasury department within the CFO suite that handles those exchange rates. I think Apple famously makes. So this isn't preventing risk. This is actually alpha they generate. They make $5 to $12 billion on average every year by managing exchange rates strategically. That's buying and selling the currencies they operate in at the right time instead of just some random time. And so that's great for big business. That's great if you do 5 billion and you can hire Chatham. But for the other hundreds of thousands of businesses that are now doing international trade because the barriers of entry have come down, technology, logistics, communication, the internet, Shopify, Etsy, all of these different software services and systems have reduced the barrier of entry to international trade. And so you have all these people playing in it. But the truth is the financial infrastructure that supports those businesses has not kept up. And so there's this big financial infrastructure gap between businesses doing international business, the current markets and systems that have been built to solve that problem, but they're just not, there's a company size gap. And so we set out to solve this problem. Quickly realized it was humanly impossible to solve this problem efficiently with just more people. And so we turned to AI 3 years ago to solve the problem, and have built an AI platform that can successfully manage exchange rates as well as a human team, but at scale.
That's fantastic. And so talk about, obviously, I don't know how much you want to get into the actual platform itself, but let's, try to share what you can as far as what makes this platform unique and special to, what's out there or what's available. Not much is available, I don't believe, but, share what makes this platform unique.
Yeah. So I think, the fundamental difference is if you know the company Stripe and you think about the company Stripe, what Stripe did really was it took a convoluted process and made it really simple. 5 to 7 lines of code, you could actually start up online e-commerce transactions. Now, it's not like you couldn't do that before. It was just complicated. And I think most importantly, because it was so complicated, businesses had a hard time integrating it into their platform. And I think what Stripe realized was businesses don't want to have to integrate it themselves, they want to be able to use services that have already integrated. So take like Shopify as an example. Shopify doesn't want to build e-commerce transaction, merchant gateway systems. So they bring Stripe into Shopify. Now any Shopify customer can actually utilize underlying infrastructure Stripe's developed and at scale. Stripe has been one of the fastest growing infrastructure as a service companies in the world, right? They're worth almost as much as Goldman Sachs. They did that in 10 years, not 150. And they're not slowing down. And so I think this infrastructure as a service, financial infrastructure as a service, building infrastructure in the cloud with code is the next frontier for sort of financial development. It's treated more like software than it is like banking. And so we have a similar approach. Rather than going from like where Chatham goes to one large customer, they land the whale, they integrate, they build this bespoke system. We're approaching this more as an infrastructure as a service approach. So if you're ADP or Papaya Global or Deal or Globalization Partners, and you have clients that have international salary exposure, rather than going out and creating an entire hedging program, those companies are able to build hedging solutions for overseas salary and employees specifically. So now if you have $1 million in overseas salary going to employees in Europe, and you're delivering that local currency in euros, you're able now, and of course that means your salary cost is going up and down with the euro every month, which makes budgeting for the CFO an absolute nightmare. You can, through your ADP or Papaya platform, just simply go, I would like to, for 3%, lock in my salary at the negotiated rate. And we take care of all of that as an underlying infrastructure to ADP or Papaya. It's sort of decentralizing at the transaction or cash flow level the idea of hedging, which for most businesses in that big category is actually sufficient. They don't need a massive centralized hedging system. They really have a few bespoke needs that's best solved through a platform partner. So we're taking that infrastructure as a service approach which allows us to scale quickly, because if you get ADP or you get Papaya, you get all of their current clients for the largest balance sheet risk that's there, which is payroll. And of course, that's a big booming market right now, moving salary and employees overseas due to remote work. In any case, that's sort of the fundamental is that if you engage with our platform, there's going to be some fun analytics. You can look at some cool stuff. You can set up some rules, but really where the power of our system is not, it's not really in the SaaS user experience. It's in the underlying infrastructure that's being used by other companies.
And, and it's obvious what the market is as far as, one can just imagine and understand, how
Sure.
large that market is, but talk about the market for just a minute here.
Yeah, so that's a great point. So we are playing in the international foreign currency market. That's a large market. It can be a little deceiving. Like, how big is that? It's $5 trillion a day. $5 trillion moves around the world every day. Now that's supporting lots of things. That's supporting intercompany transfers. That's supporting global payments. That's supporting central bank transactions. I mean, you name it. There's anything that causes money to move across a border. That in total is $5 trillion per day. Now, if you look at global payments is a $2 trillion industry. So of the $5 trillion transacted every day, across the whole world, what's the actual fees coming out of those payments? $2 trillion annually. And I don't know about you, but a $2 trillion market is a pretty big market, relatively speaking. Now, what's interesting about that, though, is that those global payments are for spot transactions. So you're like, what's a spot transaction? So of that $5 trillion every day, actually the majority of it is not being transacted that day. Only 40% is being transacted that day. So if I want to send money to Europe and I send it through, TransferWise or Bank of America, and I send that money, I'm sending money a spot transaction today. On the spot, I'm making a transaction. That's about 40% of that $5 trillion. 60% are forward transactions. I'm buying currency that I need for the future. Now, who's playing in that space? The same people that Chatham is doing business with, the Apples, the Googles, people that actually have access to the forward market. And so if the global payments for spot transactions is $2 trillion, and then you've got this forward market that's inaccessible to most people that actually need to do forward transactions, what we have the ability to do is to actually expand that market exponentially by giving access to the majority of people now playing in the international markets and being able to give them access to that forward market. Considering that $2 trillion of just spot market, we're talking it's probably, even today, if everyone had access, it's probably a $5 trillion fee market today. And in fact, we could actually expand that forward market activity, which I think it creates that virtuous cycle of more access creates more growth, which creates more access in emerging markets, which creates more growth. But really the thing that unlocks that is getting the majority of the market that doesn't have access to the forward market to actually get access to the forward market. So to put a number on it's pretty hard, but it's really big. It's one of the largest. Yeah.
Sure. So that should lead us right into then your go-to-market strategy, which is going to enable you to reach the market you just talked about.
Yeah, absolutely. So our go-to-market strategy. So like any good business person, you want to be able to start with something simple that you can expand on. And that simple thing needs to deliver enough value to actually be able to create traction. So what's the thing that's actually revenue producing that creates value, but is also kind of the minimum simple step we need to take in order to move in progression of the business plan? And so for us, that's really two areas. It's one, it's allowing smaller companies to be able to set up manual transactions. And so let's say you have a large capital expense for a piece of hardware from China, and that's going to take 6 months to build. Well, if that piece of hardware comprises 15 to 20% of my outgoing expenses for the entire year, if the Chinese yuan or the Chinese renminbi moves, that could actually that could be an existential threat to our business. So to be able to hedge a transaction like that is very simple. So we're actually launching that into beta in April timeframe of next year. We already have about half a dozen businesses signed up for it. I expect as we press on that, we could have easily 12 to 18 businesses that would just be using the core components of our platform for that. In September, we plan on launching our first infrastructure as a service business, which is going to be for global salary. So deals, papayas, we're working on some partnerships with those companies that would at least provide an integration where you could hedge what's happening in that platform from the HedgeDesk platform, and at best, perhaps even a full integration where you can hedge it from their platform without even having to log in to HedgeDesk. That'd be a much more integrated approach. We don't have to start there. And then in January of next year, we'll be launching two pretty large integrations. The beginning of 2023. That'll be the Apple and Google Play Store. Between Apple and Google Play, it's about $800 billion to $1 trillion in transactions or merchant volume across both of those. So those are app subscriptions. Right now, I can launch an app on Apple in 32 countries, and I get paid in 32 different currencies. And I assume all of the exposure of all of those currencies. I can export an app in seconds, and I can do absolutely nothing to manage or optimize the cash flows coming in. That's very easy API integration for us to be able to do. So you can kind of, first manual beta, then the first biggest infrastructure play that we see, which is salary, and then moving to some of the larger categories of API accessible transactions with Stripe, Apple, and Google.
Sure. And so the monetization, then you're going to generate the revenue by transaction fees then? Is that?
That's right. Mm-hmm. Yeah. So there's a small startup cost for a company to get on the platform, but more or less depending on tiering the volume. So you can imagine, hey, our largest customers are paying 50 to 75 basis points on any transactions. The smaller customers are probably paying around 1.5%. That varies depending on the currency. If you want to hedge forecasted e-commerce revenue in Mexican peso or Brazilian real, it's probably going to be more like 2%. If you're doing a one-time transaction with euro, it's probably more like 50 basis points. And of course, that'll vary or tier on volume. But it's a pretty rich business plan. It's a pretty rich monetary, sort of approach. I think Stripe charges, if you're large, they charge you about 2.1%. It costs them about 1.1% on every dollar they transact. So they're keeping about 1%. Our sort of transaction value will be very similar.
Okay, fantastic. Yeah. So talk about competition. What do you view as competition? Is there actual competition because you're doing something new and unique and different? Talk about, what that looks like.
Yeah, sure. So I would say that it's a very mixed competitive landscape. So you've got, I would say it's dominated by, for people that are trying to serve or businesses trying to serve the exact clients we're trying to serve with the exact same service. There's a smattering of companies out there, but I think the difference is they're consulting first, technology second. So you've got consulting firms that'll engage with a larger mid-market company to try to come up with a baseline framework of how to hedge, but it's a consulting one-to-one relationship. It's professional services, fee dominated. I would say it's definitely an analog approach to solving the problem. It's not scalable, if you will. 1 + 1 is 2, not 1 + 1 is 10. So that's a market. And those folks have been around for 10, 20 years. They're finding a slice in the market. But even, if Chatham's up here at 5 billion and Apple's up here at hundreds of billions, the competitors we're talking about are in that, 500 million to 5 billion range. They're kind of filling that next market void where they can make some money with this human first approach. So that's one area. You've also got what I would consider to be API first or developer driven transactional services companies. So they might offer you the ability to access the forward market, but they don't give you any AI. They don't give you any statistical analysis. They don't give you any way to ingest cash flows. They're really just, if you want to use an API to transact and you know what you're doing, you could build the technology yourself to access their API. That's a much smaller area of the market. Currency Cloud is an example. Cambridge FX is another example, but they're by no means an end-to-end solution. And so I think what we're really talking about is we're taking a technology first approach, and where you would need a human, we've integrated AI to make it more scalable. And so those customers are not outside the realm of possibility. If you're doing 4 billion and you've got a very complicated hedge accounting process, maybe you do need to use one of those consulting firms. That's fine. But the other 200,000 businesses that aren't going to do that, our solution is a tech first scalable solution is great. I would say in comparison to the API driven approaches for like Cambridge FX or Currency Cloud, I mean, we're offering the same thing, but it's also backed with algorithms that help manage your actual risk, that help forecast what the risk on your cash flows is, that helps with hedge accounting on the back end. It's an end-to-end solution. And then the third component that nobody offers, that there is no competitor in the market, is nobody is making this in infrastructure as a service models. Nobody's offering this through an API integration approach. That's completely novel. And so I think it's just, we're standing on the shoulders of people that have done this well for whatever they've been working on. Consultants figured out how to hedge. Great. Well, we've brought all that best thinking into the platform. Hey, Currency Cloud has a great API. Great. We're bringing in a great API too. But we're providing end to end, and then most of all, making it accessible through an infrastructure as a service model. And I think that's really the novel invention that's going to allow us to get down to folks that only need to hedge $20,000, $30,000 in exposure per year through another platform. And that's really how I think we reach global scale is that piece right there. And there are no competitors in that space right now.
Oh, great. And that's a beautiful thing, as I would say. So
yeah,
that's fantastic. Yeah. So let's talk about your raise, what the runway looks like, the usage of funds, and, where that's going to put you as far as targeting, your future revenue, and then long-term picture that exit. So kind of talk about what that whole scenario looks like.
Yeah. So, we were kind of talking about this privately before we began. 10 million is a large raise for a seed stage company. We're pre-market, pre-revenue. I would just say that this is one of the reasons this problem hasn't been solved before is one, there was hardware limitations. Two, there were software limitations. The actual AI we used didn't exist. But one of the ones that I don't want to discount is compliance. We're dealing in the derivative space. My fingerprints are on hand with FINRA because we're a financially regulated entity. So we're regulated under the CFTC, which is kind of the SEC equivalent for derivatives. And there's a large amount of just cost that's incurred by simply existing. Monthly and quarterly and annual requirements that we have to submit to U.S. governing authorities, and that cost is very cheap when you're at scale. It's pretty expensive for a startup, and so we're raising a larger round just simply because of the nature of our business. Not only do we have to be an AI company, we also have to handle essentially banking compliance, and we have to develop user experience, and we have to do sales and marketing and customer service. And by the way, even our salespeople have to be Series 3 qualified by FINRA, which is like the most complicated of all of the financial exams, just so they can talk to a client, right? So it's just a harder business to start. but it also has a huge opportunity. And we really do think that this round, should we be successful, will look quite cheap to investors in the future. With that being said, we've raised over 5. We've got another $1 million committed. So we have 4 million left in the round. I'm looking to close this by the end of the year or by Q1, early Q1 of next year. And so it's a convertible note. It's a $500 million, or excuse me, 500 million, a $500,000. I know that'd be quite something, wouldn't it? Maybe the next round.
Wow.
500,000 minimum ticket size. It bears 6 to 12% interest. So over time, if we don't have a converting event or a converting round, the interest rate hikes. 1.5x liquidation preference, pretty standard vanilla terms for a convertible note. I think the big thing is we're looking to actually have a priced round that would be a converting event within the next 2 years. And that's what we've raised money for so far. So we've raised 6 so far. That'll get us 2 years, about a year, starting from July when we first initially raised, about a year to product and about a year in operations to prove product market fit and to bring in a second round. If we bring in the additional 4, that might get us an extra quarter of time, but really what it means is we're just investing into more of the platform and more aggressively going after partnerships or early clients. And so we're really looking at a 2 year sort of horizon for us to find product market fit and raise a separate round. I already have a lot of traction actually on the A round with organizations that typically don't do seed rounds, but are very interested in following our journey. I have no concern that if we find product market fit, that we'll be able to find a generous A partner with the relationships we've developed so far. As far as liquidity events in the future goes, I like to use Stripe as an example because they're really one of the first big infrastructure as a service businesses. We have a very similar transactional model, a very similar approach. In 2011 when they got started, basically through 2015, they had a 1-to-1 on volume to valuation. So if they did 25 million in volume, then they were valued at 25 million. If they did 100 million in volume, they were valued at 100 million. That changed in 2016 as they scaled. Obviously, as our hypothetical returns become a little bit less hypothetical, then you get a haircut on that valuation. But just recently, they got valued at 96 billion, and they were doing about 250 billion in volume. So, 2.5 basically, which is pretty good. I think the great thing is that Stripe could be a primary input into our platform. So Stripe transactions flow into our platform, you can actually hedge them. Stripe deals with e-commerce revenue and invoice revenue. Well, we're dealing with anything on the balance sheet in and out, capital expenditures, global salary, e-commerce transactions, even rebalancing of a balance sheet between a primary company or headquarters in the United States and a subsidiary in Japan. All of those are things that we can help optimize and utilize the platform for. So I think we have a really big opportunity ahead of us. I wouldn't be surprised if our growth trajectory, should we be successful, looks similar to Stripe, if not more, just by the nature of the fact that we're touching all of the different types of cash flows in and out. As far as time horizons go, I think we're not going to be, I'd be surprised if we didn't have acquisition opportunities within 3 years by companies like Stripe or banks. I don't know if they're going to price us correctly, so I wouldn't necessarily be prepared to take the first offer. I'm guessing that real acquisition offers that are meaningful to us would come at 5 years, or an IPO, somewhere between 5 and 7. Yeah.
Sure. So obviously you can't do all this by yourself, Aeron. And regardless of your incredible, you have a great background and track record in what you've been involved with to date, which is really fantastic for a founder. But talk about the rest of your team that's making this happen.
Yeah, that's great. I'll mention 3 just because I know we want to be sensitive to time, but we have a deck that has a larger list of folks. Be happy to connect with anybody and fill you in on the rest of the team. I think there's 2 superstars that are really key to our success. The first one's Robert Centinella. Robert Centinella is PhD mathematician, chartered financial analyst, spent the last 5 years at BlackRock, leading their risk division for all US domiciled ETFs and funds. So BlackRock has probably now with the Dow Jones reaching near all-time highs, they've got about $8 trillion in assets. And Bob was responsible for managing risk and leading the team that managed risk on half of that, about $4 trillion in assets. If you have a 401k in the United States, there's about a 40% chance that Robert, he goes by Bob, was responsible for managing risk on that 401k. Charles Schwab tried to hire him as their chief risk officer years ago. The problem wasn't interesting enough to him. This was a very interesting problem to him to solve. And we're doing some really novel inventions, not even around AI managing currency risk, but actually just understanding the risk on a portfolio of cash flows across currencies. Really exciting problems to solve from a quantitative financial perspective. So Bob's key. I mean, he's top 5 risk managers on the planet. When Goldman Sachs couldn't figure it out themselves, they would go to BlackRock and they would typically talk to Bob and his team. The second one is Babak Dustar, also goes by Bob. We have 2 Bobs. Babak runs Microsoft Dynamics enterprise sales across the United States. So if you're an enterprise business and you use Dynamics, then Bob leads the sales team that's responsible for that. He'll be coming over in the summer of next year when we actually have a market or a product that's ready to go to market. So trying to be wise with burn and bring people on at the appropriate time. But Bob's been a part of this for years now. We first started talking when he was the VP of enterprise sales for Service Cloud at Microsoft or at Salesforce, and then eventually went to Microsoft. So 20-year sales leadership can certainly get a meeting with nearly anybody based on reputation alone. And so a great opportunity to go to these enterprises that we could actually support from an infrastructure perspective. The last one is in a funny twist. I had reached out to Joel Worrell, who is the head of engineering at Stripe for their experience platform. So the primary product you engage with at Stripe, he was the head of engineering, led a team of designers and engineers of 60, was responsible for the architecture of Stripe long-term. And I had reached out to him to be an advisor to us. I wasn't sure if Stripe would allow that. Stripe did end up allowing that. In a funny turn of events, he actually replaced me at Bible Project. So he ended up taking my job at Bible Project and is now their head of product or the chief product officer there, which is great. He will also continue to serve as an advisor to us. So, for any engineering nerds, Stripe is a really impressive business, but their engineering is a bit of a mess. They actually just horizontally scaling Ruby on Rails servers. So every time they get new batches of people or businesses, they just horizontally scale a very old architecture. Joel, as he came in later and saw all the problems with the architecture that Stripe had sort of incurred over the years, basically technical debt, we have completely architected the entire HedgeDesk platform, learning from literally all of the mistakes of the primary mentor we could look to solve those problems ahead of time, which was Stripe. So Joel is a key advisor, serving as an engineering advisor to us.
Oh, great. You got some dynamic people on your team. So kudos to you for that. One thing I didn't, ask about is traction. And I know, I believe you have a strategic partnership with StoneX, is it?
That's right.
So maybe talk a little bit about the traction. Being pre-revenue traction is always important for investors to see. Talk about where you're at with the traction and that strategic partnership and how that helps.
Yeah, certainly. We have had early conversations with companies all the way from having $2 million in exposure up to 12 million, even to Salesforce that has 3 billion in yen exposure. And everyone's interested in using the platform, at least from a conceptual perspective. So what we found is we have a lot of problem solution fit. There's a problem and we're proposing we have a solution. We found tremendous problem solution fit where, everywhere from even ourselves, we have one employee in Ireland and one employee in Indonesia. And we're losing $2,000 a month on delivery in euro and Indonesian rupee. So we have a very small exposure. We will probably be our first client and it'll save us $20,000 a year, which is meaningful when you're a startup. And all the way up to potentially Salesforce. Salesforce has a much more complicated problem because of accounting. They have to abide by GAAP accounting procedures, which means they have to abide by hedge accounting procedures. And so we're right now exploring whether or not we can solve those accounting problems early enough to actually offer it to a company like Salesforce. So a lot of problem solution fit and a lot of exploration that's happening right now with the gamut of customers that we could potentially serve. That has been good leverage to get strategic partnerships like StoneX. So StoneX is one of the larger emerging market transfer companies out there. So when Bank of America needs to send money to an emerging market, They don't typically do it themselves. They use a partner, and their partner in this case is StoneX, right? If they're delivering euro, no problem. They're moving yards and half yards, billions and half billions of euro all the time. But when you're talking about Brazilian real, sometimes it makes sense to use a partner that has better relationships. So StoneX is that firm for a number of banks and regional banks here in the United States. And we approached StoneX with this concept and to see if they would become our liquidity partner. We need a partner that can actually transact for us, right? We may one day want to take custody of funds, but just like a lot of neobanks, they want to have a banking partner like Evolution Bank and Trust, like Cross River, where they're providing a user experience and technology, but they're not taking custody of cash. They're not providing FDIC insurance. They're not doing all of the AML and money laundering procedures. And we wanted the same thing. So StoneX is that for us. If we hadn't had StoneX as a partner, just to start, we wouldn't have raised 10, we would have raised 25 million. And so just to start, which was going to be unrealistic. And so StoneX is a great strategic partner for us to be able to use in that way. So they do provide all those things I mentioned, SIPC insurance, FDIC insurance when it's applicable, anti-money laundering procedures, actual custody of cash. We're just an advisor over the account the business holds with StoneX. So we actually don't carry any of the financial risk. We carry reputational risk, we carry execution risk, but we don't carry any of the actual underlying financial risk of the transactions themselves. That's with StoneX. StoneX has never done this with anybody else. It's taken quite a bit of vetting and a lot of conversations for them to do it with us. And so, yeah, it's an awesome opportunity. I think both for them seeking new relevancy in a digitizing age, and us looking for existing infrastructure we need to tap into. So good partnership there. I think pretty exciting. I think come March, April next year, we'll have a much more robust pipeline of who exactly we're going to bring into this first group of users. But I would just say that we don't have any shortage. As long as the platform is the solution we've articulated to the problem people are facing.
That's great. So as investors are specific about what type of startups they want to invest in and what they're looking for, share what you're looking for in an investor. What specific type of investor are you looking for to help finish out this round?
Yeah, I would say, first and foremost, we really want people that are going to use any wealth generated from the company wisely. And so one of the reasons we're excited about TIE, SoCal, just even the TIE network in general, not necessarily even just the SoCal division or chapter, is that you all are purposefully and intentionally investing into the social good of many of the companies that you invest into, or who have a proclivity for pursuing, like you yourself, Jerry, involved in nonprofit sort of strategy and growth. And so me coming from a nonprofit as well, that's just kind of in our DNA. We really want folks partnering with us that aren't like, great, I'm going to buy another yacht, but hey, I'm going to take this and reinvest it into the community, the global community, reinvesting it into things that maybe aren't even necessarily purely profit driven. Our company is very our business plan works well to generate profit. Not all business plans work great at generating 10 or 100x, returns. I think in our case we are. And so a lot of the wealth this could generate, we would love to see people of good character using that wisely. And it doesn't mean, you can't use some of it for yourself, right? We're not trying to make a value proposition on using investments that you make for yourself in any way, but we'd love to see just people that have a similar mindset, to how to use new wealth generated. That would just be like my broad headline. As far as qualifications go, I think your ideal investor or your ideal entrepreneur or company might be at the center of a bullseye, but then you've got those concentric circles coming off that bullseye. What are those circles? I would say anyone that has B2B financial services experience. So if you've sold B2B financial services, if you've sold B2B fintech services, that's even better. If you have international trade experience, either from a hedge fund or bank doing hedging, or on the corporate treasury side, actually doing it within the company, that's a huge benefit. Anyone with corporate treasury experience can become a great sort of alpha tester with us, on the platform. Hey, does this actually make sense to you as a corporate treasurer or a CFO? Former CFOs would be in that category. And then I think anyone that has an eye for where the future is going, remote work is exploding. It's estimated that by 2025, the US will employ directly or through subsidiaries as many people outside the country as they do inside the country. And so the future is moving somewhere. Do you have an eye for the future? Are you a good thought partner that's paying attention to your particular domain of expertise that's able to bring some of that information back to help make us smarter? I think that's probably who we're thinking about.
Okay, thank you for sharing. That's great. Aeron, I appreciate your time. To finish out here, how can people best get in touch with you? And this will also be put on the video, so it'll be shared on screen and in the notes so that people can see that. But let's share right now. What's the best way? Is it email? Is it phone number? Is it LinkedIn? What's the best way to reach out to you?
Yeah, totally. Well, so I would say, if there was a particular chapter or group of angels that were interested, I'd say, hey, get together and figure out what your questions are, and let's do a group call with everybody. If you independently, with a family office, wanted to make a substantial investment, feel free to reach out to me directly. We can set up a call. But I would just say, I think first step is reaching out. Second step is let's get a call on and just see if it's a good fit for everybody. And it's easy. You can reach me at Aeron@thehedgedesk.com. That's AERON at thehedgedesk.com. And we can start a conversation that way. I just want to be as efficient with yours and my time. So if it's a group of you, let's just all get together on a webinar or something,
Absolutely. Fantastic. Again, Aeron, thank you for your time. It has been very insightful. It's great to learn what you're doing. I think, it's a huge, huge, huge market, and what you're doing can make a significant impact on that market. So, I wish you the best. I'm sure you're going to do well, and I look forward to following, the progress and success of your company, HedgeDesk, as you move forward. So again, thank you for your time.
Cheers. Thank you for your time, Jerry. And thanks to everybody that listened in. Thanks.